about variance analysis. So what is variance? It is the difference between any of the two variables. So in this case, we have so many variances like material variances, then labor cost variances, then overhead cost variances, sales variance, and profit variance. So in all the, if it is related to material variance or labor variance or overhead variance, that is the difference between standard cost and the actual cost. So in these variances, if the standard cost is more than the actual cost, that is the favorable condition. That means standard cost is mainly used for budgeting, and it is also used for a performance check. We can check whether the cost is according to the actual cost is according to the budgeted cost. Otherwise, we can take some measures to reduce the cost. Then, in all the material, labor, and overhead variances, I told you if the standard cost is more than the actual cost, it is a favorable condition. We will denote it by F, and if it is adverse situation, if it is not favorable situation, we will denote that by A. And in the case of sales variances and the profit variances, the reverse will happen. That means if the standard sales is less than the actual sales, that is a favorable condition, and vice versa. Okay, so we can discuss about this. So in today's class, I'm going to discuss about material cost variances. So this material cost variance, it is the standard cost minus actual cost. Then what is cost? Cost is the product of price and quantity. So standard cost means it is the product of standard price and standard quantity, and the actual cost is the product of actual price and actual quantity. And this variance, this material cost variance is mainly divided into two: material price variance and material usage variance. So from this name itself, we can understand that price variance. So it is the difference between the standard price and the actual price. So we can denote it by standard price minus actual price. This is mainly due to the this price variation is mainly due to the purchase department. That means they might have made some change in the price while placing the order or purchasing. Then but the price is actually paid for the actual quantity, so we have to multiply that with actual quantity. So material price variance is equal to standard price minus actual price into actual quantity. Then this material usage variance may be due to the difference in the quantity used. So the production department might have made any of the changes in the quantity used or the consumption of material used. So material usage variance, it is the difference between standard quantity and the actual quantity, and there is no price change. So we can multiply that with standard price itself. Then material usage variance is again divided into material mix variance and material yield variance. This material mix variance means the ratio, the standard ratio set might have changed while making use of for the actual production. So for the material mix variance, again we have to prepare one more column, that is the revised standard quantity. So we can write the formula here. So it is revised standard quantity minus actual quantity. Again, this is the subdivision of the material usage variance. So we can multiply that with the standard price itself. And then material yield variance means that is the usage of, that is due to the usage variances. Okay, we will take one example and we can reconcile that one. That means material cost variance is equal to, you should get, after finding out each of the variances, we can reconcile that one. That means material cost variance is equal to material price variance plus material usage variance. Again, we can check whether material mix variance plus material yield variance also give material usage variance. Okay, so we will take one example. Okay, so in this case, it is given that two materials are used, material A and B, in the ratio 40% and 60%, and 10% normal loss also happen. And the standard price is given as 20 and 30, and the actual quantity used for material A it is 90, and for material B it is 110, and the actual price is for material A is 18, and for material B the actual price is 34, and the actual quantity used is 182. We have to calculate each of the material variances. 20, 30. So first we need to prepare the columns. So in this case, if we are taking the materials A and B in the ratio 40% and 60%, they had given that normal loss 10% is happening. So if we are reducing that from 100, you will get that as 90. And what is the actual quantity produced is 182. So we have to arrange, we have to set according, we have to revise that according to the 40% and 60% ratio for material A and B. We can do that one first. So for material A, what is the revised standard quantity? We can cross multiply this one. So for material A, it will be 40 into 182 divided by 90. And for B, it will be 60 into 182 by 90. So it is coming as 80.888. So we can round it off to 80.89. And for material B, it will be 60 into 182 divided by 90. So that will be coming as 121.333. So we can round it off as 121.33. So this is the revised standard quantity. We have to make use of that. So standard quantity and standard price. So material A, material B, then standard quantity is 80.89. And for B, it is 121.33. And the standard price is 20. And for material B, it is 30. And actual quantity is 90 in the case of material A and 110 in the case of material B. And the actual price is 18 and 34 respectively. So we have to add this actual quantity total. So we will get that as 200. And then we have to make one more column to get all the variances. So that is a revised standard quantity. So we have to revise this actual quantity in the standard ratio. So the actual quantity total is 200 and the ratio is 40% and 60%. So it will be coming as 40 divided by 100. And then in this case, it will be 200 into 60%. So this is the revised standard quantity. Then we can see that, so for these two, the quantity is same, but ratio is different. Ratio or mix is different. So these two differences will give you the material mix variance. But for these two, ratio same, but mix different. So we will get material mix variance. In this case, material yield variance. So for material A, so we can find each of the variances. First, material price variance. The difference between standard price and actual price. So standard price minus actual price into actual quantity. So for material A, it will be 20 minus 18, so 2 into 90, And for material B, it will be minus 4, 13 minus 34 into 110. So the total is coming as 260. So this it is negative, so we can write it as adverse. Next is material usage variance. So the formula is standard quantity minus actual quantity into standard price. So 80.89 minus 90. Minus 90. So we can calculate this one. It is minus 182.2. This one 21.33 minus 110 into 30 is 339.9. So when you do the calculation, it will be coming as 157.7. This is plus, means it is favorable condition. Okay. Then we can find the material mix variance. Material mix variance, it is the difference between revised standard quantity and actual quantity into standard price. So for material A, 50 minus 90 and the price is 20 and 30 and 20, 30. So this is minus 10 into 20 is minus 200. This is 10 into 30, so it is 300. So 300 minus 200, you will get it as 100. That is material mix variance. Then we have to find material yield variance. Material yield variance is the difference between standard quantity minus revised standard quantity into standard price. Standard quantity 80.89 and 121.33 minus revised standard quantity 80 and 120. 80 and 120. Standard price is 20 and 30. Can do the calculation. It is 17.8. $39.9. So when you add these two, you will get it as 57.7. Now we can do the reconciliation also. So material price, material cost variance is equal to material price variance plus material usage variance. Material price variance is 260 adverse. And material usage variance is 157.7 favorable. Favorable means plus. It is coming as 102.3 adverse. Then we can find the material usage variance. It should be equal to material mix variance and material yield variance. Material mix variance is 100 favorable. This is also favorable. So 100 plus 57.7. So 100 plus 57.7 both favorable. So total will be 157.7 favorable. Okay, we got the material usage variance. We got here as 157.7, and we got that material mix variance and material yield variance. Total is also material usage variance, that is equal to 157.7. So that is the reconciliation. So all the cost variance we can reconcile after getting each of the variances. Similarly, we have the labor variance also. In your syllabus, you have to learn labor variance also. In the same case, in the case of labor variance, labor cost variance, it is the labor rate variance is there, labor efficiency variance is there. Labor rate variance is similar to material price variance. and labor efficiency variance is similar to material usage variance. And then labor efficiency variance is again divided into three classifications. One is labor idle time variance, and one is labor mix variance, and another one is labor yield variance. So that we can find in next class. So then thank you.